Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Much anticipated Chinese GDP figures come out, 6.9. That's not the 7% that we were sort of promised, but very, very sort of only marginally just sort of below there. And now the debate rages about the sort of integrity of the numbers. It's sort of interesting if you actually drill down a little bit deeper, you see quite a big growth in services. That's up around 8.4, 8.5%. And that's really starting to take hold in China now as the services sector really just start to pick up some of the slack left by these sort of industrial and manufacturing sectors. Also as well, some quite interesting comments. So we actually look at the sort of quantity of input going into the sort of Chinese industrial and manufacturing sort of side. Certainly on a value-wise, it is down. But then if you look at the cost of raw materials, sort of oil and a lot of the base metals, they are down quite substantially. If you look at the actual quantity that's going in, it's about the same, if not just maybe a little bit higher. So, maybe again it's sort of interesting, you really do need to drill down into these numbers and not just look at the sort of headline figure and say, oh, it's weaker. Earnings season in the US market has been possibly a tad little disappointing. Certainly the financials and the banks have been a little bit sort of subpar and performing a little bit lower than expectations. But again, with the US data, it's interesting. If you actually look at the sort of, drill down and get below the sort of headline data, inflation is maybe running again a little bit stronger than we first anticipated. Because again, a lot of the sort of big numbers that have been in the index, which is the oil prices that really fell dramatically around sort of 12 months ago, they're going to start to fall out of the index now over the next sort of 3 to 4 months. Certainly unemployment is still on a downward sort of trend, and it's interesting now listening to the Fed officials. You had one of the Fed governors, Williams, on the tape, and he was sort of saying that really the U.S. economy is in a pretty good place. Unemployment is sort of falling, growth is pretty reasonable, and inflation is maybe a little bit stronger than we first anticipated. As I say, when you actually drill down through those numbers, and maybe it is time to look to increase rates. Now, if that is the case and the Fed are going to look to increase rates, they've really only got 2 meetings left before year end. But he did then go on to say that, it will be a slow, gradual process. And we are looking at, certainly a more sort of normal rate now for the US is going to be lower than previously anticipated and certainly lower than previous cycles. Here in New Zealand, still got that Infratel bond out in the marketplace, 8 years at 525. If you're interested in that, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. And if you are looking for income options out there, there are other avenues to pursue. Certainly some of these shares, high dividend shares, are paying some pretty reasonable returns. Some of the bonds out there are okay, and some of the annual resets as well. Look pretty attractive when you compare with the sort of bank term deposits on offer at the present. So I say, if you are interested in that, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.